He's joining us to take some questions. Mr. Karwa, great to have you with us here. Thank you very much for your time. Good morning. Your first thoughts, Mr. Karwa, in terms of
thank you very much.
Near to medium-term trajectory for equities. How much of the changed macro environment is in the price, and how much more is there to go, in your opinion?
Yeah, as you rightly said, markets are always forward discounting. And if you see, the markets have corrected in the last 6-7 months. So it is not that what we see today is a function of what is happening around us today. Markets have always looked forward-looking, and we have seen a massive correction which has happened in anticipation of interest rates, inflation, etc. Maybe the Ukraine-Russia war was something which the markets did not anticipate. But having said that, I think as we speak now, the next 12 months, 18 months, what is expected to happen in terms of recession, slowdown, inflation impact, interest rate impact, possibly most of it seems to be discounted. As we can see of late, banking stocks, they have started to kind of bottom out and maybe some upticks. I feel even IT companies, maybe this overdone. And in the next 2-3 weeks, we should possibly see that sector also getting discounted. So the sense is that wherever the selling has been overdone, those sectors seem to be now in the process of bottoming out. But having said that, there are some sectors which are still very overvalued, and where even a whiff of negative news or expected competition, maybe 2 years down the line, and we can see stocks correcting as the way it happened yesterday in the paint companies. So it's a double market too, where some of the sectors have already bottomed out. We are also seeing sector like insurance, which has been in the doldrums for the last 2.5 years. Again, that seems to be showing some upticks. So it's a mixed market.
It's a mixed market. Yes, you refer to Asian Paints. That was one of the topics yesterday. Krishna, hi, good morning. Since you refer to IT, I want to just focus more on the mid cap pocket, because that's where you've seen a bigger correction. But that is where perhaps the valuations had also gone up a lot and may still not be back to the value zone. But your thoughts on whether you start to buy here as well?
See, I would say that what you said, right, Anuj is correct, that the second-tier IT companies, their valuations, because they were exhibiting maybe faster growth or higher growth, had gone on the extreme, and some of the corrections have already happened. Mid-cap ITs obviously will trade at a premium to the large-cap ITs because of the inherent growth that they will be able to exhibit going forward. So if you believe that the large-cap IT can still correct further from here, then there is scope for even mid-cap IT to correct. Otherwise, I would imagine that the top 10 companies broadly are getting into a buy zone.
Okay. Krishna, hi, good morning, and thanks for joining in. What do you do with a space like metals, where the pressure has been quite large and stocks have corrected about 20-30% in a few months? Do you buy the dip? Do you keep the faith, or do you churn out?
See, I think you should distinguish between the ferrous and the non-ferrous segment, first of all. I believe that the non-ferrous segment, the companies over there are more into value added and more global facing, or rather they have their operations more in the global segment of markets. There, the opportunities could be decent going forward. And ferrous metals, obviously, there are some challenges in terms of government regulations also. But having said that, broadly, if you look at the balance sheets of metal companies, they are phenomenal in terms of the kind of money that they have made in the last 2 years and the debt reduction which has happened. So my sense is that they will settle at current prices broadly. And also as part of an investor portfolio, I would imagine that metals, commodities, fossil fuels, etc., they should form an important part, maybe 10-15% of your portfolio.
That's emerging as a strong view across lots of global macro kind of watchers as well. Energy and that part of the market should be part of the portfolio. Your sense, Mr. Karwa, on autos, which is another space which had started to see some moves higher, and we've had a couple of years of because of multiple reasons, very, very low demand. And that may start to change. We still have issues on the supply side, etc. But what is your sense and what do you like in that space?
So we have been positive on the auto sector now for more than 6 months plus, and some of the stock prices have also reflected, are also showing a lot of outperformance. Now, if I go within the auto sector, obviously the passenger vehicle segment is one which is showing a lot of resilience as far as demand is concerned. So that's a segment which we like. And as far as commercial vehicles are also showing a lot of resilience. So that's again another segment that we would be looking positively at. And tractors also seem to be on an uptick. So broadly, I think it's the two-wheeler segment which we are kind of neutral, but otherwise across the board, the auto segment, auto OEMs looks good. In fact, apart from auto OEMs, even some of the auto ancillaries, which are both a play on local as well as opportunities, they should also be invested in.
Okay, some of the beaten down stocks are making a bit of a comeback today, by the way. Jubilant Foodworks is up 5%, Balrampur Chini is up 3%. Krishna, what about this whole QSR space where, people had built in high expectations, but the stocks have seen a big decline, led by the biggest of them all, of course. But are you buying any stocks in this space?
I think we are very positive on the QSR space, and the growth that some of these companies are exhibiting is very good. And a few months, and with the opening up of the country and with colleges and all people on the move now, I would imagine that most of the QSR companies would be able to show phenomenal growth. Their business models have also got fine-tuned apart from in-dining as well as business. So we are positive and invested in some of these companies.
Okay. Is there any space where you see good value now for a long-term investor? Something that you would perhaps recommend buying into despite all the market volatility?
I think the biggest value today, what I see, is in the financials. No doubt it's an over-owned segment, and the large cap banks are available at very good, attractive valuations. So if investors are still not invested in that segment, despite the possibility of further FDIs from a stock price perspective, but the business momentum that many of these banks are seeing is very good. So from a medium-term perspective, to be able to make a 20-20% next 3 years, this is one segment where one should be looking to invest in.
Okay. And one final question on the paint sector. So much, there are large groups now entering into this industry. Do you think the incumbents are going to face the heat? Or do you think new entrants to come through, not impacting the current players too much?
See, there is no doubt about the segment will achieve in the coming years. The challenge is only on the valuations that many of the incumbents are enjoying. And what we are witnessing today, the stock price correction with the market cap erosion for many of these companies is not a function of any challenges as far as demand and growth is concerned. It is more about valuation, and that is what we are seeing. So a fifth of competition, or maybe some 3-4 new companies entering the business, and we saw how market reacted. So for the existing companies and even for the companies will be very good, but maybe the valuations expectations should be tempered.
Okay, Krishna, is inflation really now carrying the risk of derailing this this market? And if we are already not there.
Yeah, I would look at it this way, that look at the various actions that the government of India is taking to manage inflation, whether it's the petroleum price, a petroleum duty cut, or the ban on wheat exports, or restrictions on sugar exports, etc. So government is taking all its efforts to reduce the impact of inflation, including RBI increasing interest rates, etc. So my sense is that yes, inflation is a challenge, and that has to be factored in as far as interest rates or valuations of companies are concerned. But it is not that the authorities are not aware of it, and they are taking all the action as far as possible to tame inflation. And most of it is obviously imported, which is not in the hands of the government, which is oil prices. So, and look at the way they are also managing the fisc in terms of yesterday there was this announcement that they are looking to divest their stake in Hindustan Zinc. So I think government is playing the game very properly in terms of trying to manage inflation and also trying to see where resources can be raised to manage the fiscal deficit. So net, yes, it is a concern, but probably it is broadly discounted in the stock prices of many companies.
I mean, there's very little way to is something we can discuss. Do you think because of the revenue shortfall, extra borrowing, etc., which will be required, the excise cuts and other measures, the pace of disinvestments should pick up substantially going forward? What's your sense?
Very difficult to say that because obviously there has to be a market for many of these opportunities. So I'm sure the government will be very cognizant of what can be sold and what cannot be. We have already seen that BPCL divestment did not go through. But I'm sure that the government will have various levers at its disposal to be able to raise the required resources to manage the fisc. I think that's the better way to look at it. But by itself, there are many PSUs where the opportunity, not from a divestment perspective, but where valuations are reasonable and maybe they are more on the commodity side or so-called non-ESG kind of businesses. But I would imagine that that segment, which is not so loved, can give you very good, decent returns from a next 2 years perspective.
Okay, Krishna, thanks a lot for joining us. Good talking to you as always. Thanks for your time.